Hello, friends. How have you been? Financial markets have not been kind to investors who bought the dip recently. For Chinese tech investors, not only does one have to be concerned about global inflation and rising interest rate on financial asset pricing, they also have to be worried about the battle of the systems. SEC continue to highlight that while there are ongoing unproductive discussions between US and Chinese authorities regarding audit inspections and investigation, significant issues remain and time is quickly running out. Securities Exchange Commission SEC continues to emphasize that for those Chinese tech stocks deemed to be too sensitive to comply with Public Company Accounting Oversight Board's requirement, they should consider with the process of delisting. All in all, I still view this as a risk pertaining to the battle of systems, like what I've been mentioning over the last 6 to 7, 8 months. I have repeatedly mentioned that as long as China can increase its economic activities by fine-tuning its COVID strategy, there is a possibility for Chinese tech stocks to attract the capital from global investors. This may be a concern that US may be worried about in face of market crash pertaining to US tech stocks and US equities in general. So far, Hang Seng Tech Index is still holding above 4,000 points, though it has dipped slightly below 4,000 points on 25th May 2022. I have a quick look of Kuaishou Tech keys data and find it acceptable, though the price risk is always on the cash burn because Kuaishou is burning around 1.5 to 1.6 billion renminbi per quarter so far. Given its net current assets level being around 8 billion renminbi, the existing cash that Kuaishou Tech really have right now may not last it for over a year. And this is a concern, and I have always been worried that it may have to do a fundraising exercise at much lower valuation. Something that I can take away from Kuaishou Tech as well as net earning guidance is that companies globally are more cautious about the spending on advertising. Here is Facebook, aka Meta's price chart, as well as Snap price chart. It further shows that there is not much support to talk about for technology stock, given world concerns over inflation, increasing interest rate, as well as China's current COVID strategy. This is really a big time to be worried about global recession. This concern naturally will provide further weight on equities pricing, and investors would less likely to be more willing to invest in stock. Alibaba is also due to release its 1Q 2022 results soon, and whether will it further impact on Chinese tech stocks remain to be seen. However, the recent price pullback of Chinese big tech like Xiaomi, Tencent, Kuaishou Tech by 5 to 10% should provide some comfort that Hang Seng Tech may potentially find support between 3,800 to 4,000 points range. If, however, China continues to adopt harsh COVID strategy, there's really a possibility for Hang Seng Tech Index to retest 3,400 points and below, which were last seen in March 2022. Nothing is impossible. And if the COVID strategy that has been adopted now impact on China's GDP, Q2 numbers and Q3 numbers, it will be very worrying to own Chinese tech stocks right now because they may go down another 1 leg, 2 leg, or even 3 legs. As always, this should not be construed as any investment or trading advice. Thank you.